Right, good evening everybody. Now another subject, financial statement analysis. A little bit different subject compared to other things that I do actually. Right? So because all others are more technical. This is not that much, and hope you have completed how many sessions here? Actually, Anurasa did four sessions. Then I have another 4 sessions, altogether 8. And I think Chatura will do another business valuation part. He will do. Then probably I will take this lecture and next week, and thereafter he will take at least 2. So thereafter I can come back again. Right now, up to now, what you have discussed in this course in it? We have business valuation, ratio, financial statement analysis and business valuation. What do you learn in this subject up to now? Hmm? Huh? Sorry? Okay. Introduction part, what else? Techniques you have learned, therefore I don't want to discuss again techniques. You know all techniques. Financial statement analysis means you have to use techniques and methods to analyze. All techniques and methods already we have discussed. Is it? Not yet. You didn't come, okay? Did you participate for lectures? Did you participate for previous lectures? Not all. No, not all. You came? Not all. Right, anyway. Right now actually my task is to, already you have learned all techniques. So actually my part is to describe these things briefly since this is my first one. And I'll discuss some how to analyze these things in different aspects. Like today I am going to take only small or basic level calculations. So then I'll do another one like having actual financial statements. Like it's little difficult to do in this system because we need to download the PDF and we have to run through here and there to find data. But I'll do that kind of session. With you, I'll do all kind of analysis from different aspects. Having actual annual report. I think Amritsar also did kind of thing with calculated ones. But the important thing, let's say if you need to calculate ROE, how to extract data to calculate ROE from actual annual report. It's kind of important part. No? This thing already you have done. Yeah. Yes, right. Assignment 2 and 3. Right, already done for the ratio analysis thing. So the same thing repeating. So it's kind of anyway drawback in the syllabus, I should say frankly. So already you have learned. I am not sure whether we have that kind of big thing to learn in ratio analysis. I don't think so. Right? Because already you have done ratio analysis up to a certain extent, but I read most of the assignments that you did in first semester. Those are, if I tell you the truth, those are not up to the standard. Nobody has elaborated ratios. You can see even in the LMS page. Today also I rectified that problem. So then I went through that assignment also again. What you did, you just calculated, but most of the things are wrong. I didn't deduct marks or wrong things, but anyway, if you have calculated those things, I gave marks. When it comes to practical scenario, when you calculate ratios, you have to be very careful. Because different items are there in financial statements. Simply I can say what is return on capital employed. How do you take return on capital employed from actual set of financial statements? When you take equity or reserves together, there are some non-current items, then lease, credit apart, interest in suspense, employee benefits, everything inside it. So what figure should be extracted as return on capital employed in practice? So there is no universally accepted method also. But you have to be very careful if you select a particular item from actual financial statement. So that's the area I need to touch actually because already you have learned almost all the concepts. I think vertical analysis, horizontal analysis, common size financial statement, trend analysis, everything you have learned. But only thing we will discuss little how can you use this information to make decisions. Actually today what I am going to do, I am going to recall last 4. I need to start like that, so that's my method, right? So actually Anwar sir also told me to do little calculations again because he told that he didn't do a lot of calculations. He mostly explained the things. I saw you have learned a lot of theoretical aspects, right? More than I think 100, 200 slides were there. I noticed almost all are theoretical aspects you covered, but I am not sure whether you simply analyze any scenario. So I'll do small story today, very small one, and see the way that we can analyze. Even I think you started with the multinational company to analyze. But I feel like we need to start with the small, very simple, very basic level entity to start off. Then only you can understand, like let's say if you start a sole proprietorship business, at least how do you analyze your financial position at the end of a year? So we have to start from that point. Then you can analyze a partnership business, or you can analyze private limited company. Then you go for multinational one or PLC. If you start with PLC, sometime you are missing important things when you analyze. Very simply, if I ask simple question, let's say like there is a company or a small business, they are struggling with cash flow, but they are earning billions of profits in the financial statements. Very common scenario. No? Most of the companies are there, they have more profits. They don't have money in the business. They are running short with cash. They don't have enough cash, mostly bank overdraft. So what is the reason? How do you analyze that kind of scenario? If it is bank overdraft, is it not good or is it good? That means small scenario. Look, not the PLC or a big company that they are talking about leverage, everything. A small business. Because in Sri Lanka, most of the businesses are in small nature, no? Small scale, no? Or the medium size. SMEs. Not big ones. There are big ones, but less. So therefore, I'll start from that point. I'll do some calculations today, dealing a lot of techniques that we have already done, and I need to explain how to analyze these, especially starting from small entities. Right, so I'll take small startup entity to analyze these ratios and cash flows together. Actually, when we analyze financial statements, pure ratios are not sufficient sometimes. We have to merge these ratios with qualitative information. Even simply if I say like this, let's say my turnover over last period coming down by 20%. My turnover over last, let's say 5 years, or let's say 3 years, reducing up to certain level. Now it's dropped by 20%. Is it good or bad? Will you feel? Sometimes you will feel like it's not good. But what I feel is like, if you look at the condition, market condition, that 20% drop is good than having 40%, because all other entities sometimes they are dropping sales by 40%. If you take good example, construction industry, what has happened? Most of the people revenue, it came down over last 1.5 years. In that case, that's why I said now, ratio wise it seems like downward. But you have to look at the industry, what has happened. That's qualitative aspect. Without having the understanding of industry, you can't say the drop down sales is bad. Sometimes drop down also good in that case, because 20% only. There are some other entities, they drop down by more than 20%, 50%. So then that's why I said mostly when you make decisions, you have to look at qualitative information. You know, actually final outcome of this subject is to learn how to make decisions related to valuation and how to analyze financial statement, make different decisions. Also, you have to look at the different point. Like let's say, sometimes the way investors are looking at financial statement is totally different from, let's say, lenders are looking at the financial statements. Therefore, we can't take all these ratios into one basket and analyze a company. It is not possible. In what point of view you look? It is important point. Let's say now, solvency. How do you look at solvency? Is it from investor's point of view, or it is lender's point of view, or it is manager's point of view? 3 different angles, but one ratio. One ratio or one set of we have, but 3 different angles we need to look at it. Sometimes let's say there is a company, they have more debts. More debts. From lender's point of view, sometimes you will feel like it is not good. They have more debts. So therefore we are not willing to give loans more. But if you look at from investor's point of view, you will say, oh, it's good because they have more debts and there is retainer is there. So therefore I should invest. That's investor's point of view. Look, investor will think in different way, but same ratio you have. From lender's point of view, they will think something else. So you have to be very careful when we analyze. So that's why I say every time, even though technical ratios are there, interpretation is the most important part. With qualitative facts. Sometimes high gearing, lenders, sometimes they are negative with that kind of high gearing. You know high gearing, you learn no debt equity ratio and all. Now my assumption is that you have learned all techniques. Based on that only I am going to analyze. Otherwise I am not going to again. So then 4 sessions, no, already you have spent 4 sessions. I assume that these terms already you have learned, solvency, liquidity, everything you have done. So that's how I basically, dew point analysis, dew point, you done? Dew point you have not done that much. I noticed little. I went through all these like you will not believe. or last 3 days. Now I know what are the things he has discussed in slides. If something is there, I believe it has been done. Right? So I don't know if it has been done actually proper, but I believe so. So I have right to think so because it is there in slides. So they have seen DuPont also done to a certain level, as I remember. I noticed it somewhere. I went through all slides there, in LMS, right? Because usually if I don't do it from the very beginning, I don't know what they have done. DuPont analysis. Who did it? DuPont done. Full one? Just introduction. I'll do it today. I'll show you the relationship of DuPont and how can you use it to analyze it. So I'll do it, one example. So I noticed it has not been done that much. So therefore I'll do it a little detail today. Right? That's the only area that I'm touching in detail. All others I just run through. But anyway now, since the first thing I need to give kind of introduction, when you analyze financial statement, you have to be very careful. What is the role that you are going to play when you analyze? Are you investor? Are you lender? Are you manager? General public? Creditor? Or whatever the party? Based on that only you have to look at the ratio. Commonly you can't interpret it. Mostly it's kind of misunderstanding. People think high gearing not good. Low gearing good. Something like. It is not so. High GP good. Low GP bad. High dividend payout good. Low dividend payout bad. No, we can't say like that. What aspect you look at? Investor's point of view, lender's point of view, manager's point of view, different aspects. Now simple example again, if I tell you, let's say very simple example, I take only limited amount of data. Let's say now there is a company X, there let's say earning per share, EPS let's say 4 rupees. Company Y EPS let's say 5 rupees. Simple hypothetical case. DPS let's say 3.5, 3.50. Here DPS 5. Let's say 4.9. I'll take small. 4.9. 4 rupees and 90 cents. If you have this two data, based on this, if you are an investor, which company you like to invest? In which company you like to invest? Having limited scope, with this you can't make any conclusion. But if you assume that these are the only two information you have. Yes, why? You like to invest in why? Why? High level of earning per share and high level of dividend per share. Is it? Same others? How many people online out of 70? 70 ගණන් 1, 2, 3. One you know? The last one? Are you also there? What is your name? PSA. Then 2. Anyway there. 3, 4. Chiran. Then only 4 no? Vithanage ඔයගොල්ලෝ online ද නැහැ? නැහැ, right? 2 only online people and 4 in the class. Very good, right? 6 all together, right? Out of 70. Like anyway, it doesn't matter. So at least we don't expect more in the class, but at least people should be there online, right? Anyway, it doesn't matter. Usually I don't care about attendance. If they can pass, it doesn't matter, right? Right now, anyway, now what is your decision? What do you think about? X. Y. Why? Why everybody? Why do you say X? All others. Why? You said X. Why? Earning per share is 4 less no compared to the other one. That is the analytical aspect we need to have. That's why I said, look, if I invest in, covering investment. If I need to select out of these two, I select X. Why? With this information, there should be some other information you can look at. Let's assume only these two information we have. Why? Look, here they earn 5. Out of earn 5, already paid. If I am a new investor, already 4.90 paid. No. As new investor, you don't have anything to take in that. Already, look the way that we need to analyze. But there, they earn 4, but they have paid only 3.50 compared to other, it's less. Got it? Understand? So that means the dividend payout ratio, not dividend per share. Here dividend payout ratio is, yes, my calculator. 3.50 divided by 4, it's 87%. In X, the other one, 4.9 divided by 5 is 98%. That means out of the total earning, already it has been paid by the company. How much? 98% in X, Y company. But in X company, they have paid only 87% something. In that case, if you are going to take new investment, you have chance to get something in the future. Understand? If it is already paid, you can't get anything now. Already paid. So that's why I say now, usually in which sense you are going to analyze, you have to look at very carefully. So that's the first message that I need to pass. But with that, what I am trying to do, I'll discuss all these later from different aspects. Now today actually I am not going to touch this area. Investors' point of view, I'm not going to consider today. I'll take the original valuation done by the business valuers in invest in shares and all others later. But it is better to do after learning share valuation or company valuation. So how can you use ratios to value a company and its shares? So I'll do that part. Now this is kind of simple example. Like look, the way that we need to think. By looking at ratios, you can't say it is good or bad, but think what point of view you are going to look. Now if it is existing shareholder or existing investor, in that case, yes, it is good to be in Y. But if you are a new investor, no need to go for Y. Better to go in X. Why? Their dividend payout ratio is little less. That means they have retained something inside it. We call it retention ratio, dividend retention ratio. They have retained, they have developed it, or they retain it for the future developments. In that case, you can have something as new investor. In this company, already everything paid. No point, right? So anyway, now it's kind of idea you have to have. With this, if you start the session, now today actually what I am going to do is I'll just brief everything, right, to recall what we have learned within last 4 weeks, because I need to do some calculations today. I'm sure if I start directly with calculations, you can't remember anything. So then it will be a problem. Therefore, I thought that we will have at least 7 8 people in the class. I have seen that, no? There are. The finance. Now he is there every day. Now mostly he is there. Sometimes these 2 girls are coming. That how the Velvito also coming. Where is Velvito today? When? Lakun hadala dunna giya. Is it? Lakun tika hadagatha giya. Right, anyway. Let's see. In finance, only 2 people. Every day, maximum 2. Only you. Very good, no? Like individual class, no? You pay. You should pay not 300. How much? We pay 240. No. You have to pay actually 480,000 now, because you are taking individual class. No? Individual class, big cost now. No? Group class or individual class, very good. You have to pay more. Right, anyway. Oh, otherwise there is another chance. You inform the lecturer that if you don't pay something to me, you will leave the class. It's a good point, right? Right, anyway, let's start. Right, then we are starting with the interpretation part. But I'm not going to touch all these areas now. Most of the things, qualitative things we have done. So I'll just run through it quickly. So then, if you can remember, what's the importance of interpretation? Why do you link this part into accounting process? You can remember in basic accounting, you may have learned with Professor Jayamaha in accounting process in the first few days. We start with gathering information. So then what we do? We record them systematically, we summarize them, we classify them, we prepare financial statements, and what do? Analyze it to give. That's the place where we link this interpretation part in accounting. Is it management accounting part or financial accounting part? Interpretation? That's basic things. No? Hardly manage, the role is management accountant's role. But you have to use directly what? Financial accounting information. So this role, if you analyze it, your role is management accountant's role, but basically you use financial accounting data, right, to analyze not only financial accounting data, we have to look others as well. Actually, it's kind of process of arranging, examining and comparing results in order to what? To make economic decisions of stakeholders. So therefore, we are going to do this thing for stakeholders. And look, you can see the main components of appropriate framework to identify, analyze. So we need to, I told you, this is very important point. Look the first point. Identification of the user of the analysis. So that's what I said previously. You have to think about who is the user of this financial information. Based on that only you have to prepare your analysis. So then look, the main point is you have to look at the user. In financial accounting, the main drawback is we prepare common set of financial statements to achieve all users' objectives. One common format, income statement, one format. We provide income statement to all users, but their objectives are too different. So that's the importance of having ratio part. So that's why we need to start with the user perspective first. Which user will be addressed by this analysis? It means what is the role that you are playing, very simply. You are going to present this information to the management or whatever the party. So that's the main point you have to start. And understanding the nature of the business. Look, not to calculate ratios. That's what you need to do. Understand the nature of the business and industry. It's kind of process actually you need to do. And also identification of relevant source of data. Look, if data is wrong anyway, what happens? Your analysis is wrong. So therefore you should not purely depend on all statistics given in any financial statement when you start analysis. Also another one, numerical analysis of data. This is also important part. That's what we mainly focus. Also interpretation of results. Actually this is what we mainly focus. But look, it is not the main concern in analysis. If you look at it very broad sense, they are in your first year assignment also what you did. You mainly focus only in these two. I am 100% you didn't think about this side. But you did, you analyze, you calculated ratios and you just interpret it. To whom you interpret, to whom you address. You also don't know to whom you are going to address. Based on that only you have to interpret it. So that's why I said now, sometime when you look at last year to this year GP, it has been increased or decreased, what you say, you just, it has been increased or decreased. To whom you are going to present information. Based on that only you have to say something. So therefore, mostly people look at these two in analysis, but they are not focusing about first few. So therefore it is important. Thereafter finally, what is it important? Writing a proper report. Look, this is how we should do analysis of financial statements. But mainly already you have learned, which part you have learned? You have learned the numerical data analysis part. That part you have done. So but my first example I told you in the previous one, you have to understand who is the user. Based on that you have to write everything. You have to inline everything based on the user's requirement. Therefore analysis, just doing analysis is not important or enough. Right. Let's see here now how can we do this later. And that's the way of doing proper analysis. Users anyway you know, I don't want to explain. There are some items I don't want to explain one by one. You know who are the users, no? I don't want to explain. Information relating to the financial statements, income statement data, maybe cash flow data. But anyway, very important. I am not sure whether you have more focus on cash flow ratios. I am not sure exactly. I didn't see also in PowerPoint slides. Not that much. Only few cash flows you analyze, but I will do more analysis for cash flow ratios. Probably I will take another 1 hour, 1.5 hours in a session to analyze cash flow ratios. I am not sure whether you have done it. No, not that much. We will do it later. Today actually I didn't focus that much on that actually. I forget to take all these cash flow ratios. Industry wise ratios are there. Now very simply you should have kind of experience, like let's say if you have hotel industry. Hotel industry, what will be average GP margin? As you guess. Take hotel, restaurant, hotels. It's close to 100% sometime. In pharmaceutical industry, more than 100% mostly. Their average GP. That means you have to have kind of industry experience to analyze this thing. Otherwise you can't analyze it. Sometimes, let's say there is a business who is operating in pharmaceutical company, you get 20% rate. Sorry, not 20%. Let's say you get 80% rate. Sometimes you go, 80%, very good. No, sometime in the industry, in pharmaceutical companies, they earn sometimes 1000%, 500% from drugs. So that's why anyway now this government has reduced how much? How many drugs? Prices of 48 drugs now. I'm sure they have reduced 48 drugs cost. With advertisement they should be able to reduce another at least 84 drugs, because that kind of big advertising campaign is running these days. You can see now they inform that deducted. They spend billions of money on advertising. The point, but they have reduced only 48 no. ඒ සල්ලි වලින් තව එක අඩු කරන්න තිබ්බ 49 කරන්නත් තිබ්බයි. Not 48. But anyway now we can think about budgeted data and the variance analysis part. It's also important. Also you can analyze with competitive data. I think those are there. These also I think already you have discussed. මේවා කරා කොහොමද ratios compare කරන්න කියන එක. With past ratios, competitors ratios, industry ratios, etc. Those are there. And also when you analyze financial statement, you have to think on size of the business, riskiness of the business, economic and social political environment of the business. It's very important. Industry trends, I told you. Even now if you are talking about construction company, everybody now know it's little downward, not fully, but compared to history, it's little downward. When you look at even tourism is stagnated. When you talk about financial market, little downward. Now these days only one advertisement you can hear from financial market. It's only from perpetual treasuries. So they are the people who have money, therefore they publish advertisements, right? So I have seen now they are publishing a lot of advertisements these days. So all other financial companies, little down, right? Even leasing, not that much. Leasing, this is peak season, December, right? For businesses. But less advertisement. Now these days, yesterday I counted in the peak time in a very popular channel, most advertisements from government, not commercial advertisements. It means commercial sector they don't spend that much of money, so they are very serious on spending money. But the government doesn't care about it. They have money, they spend. So that means සාමාන්‍ය වෙන්න ඕනේ මොකද්ද? In December season, you should see a lot of commercial advertisements. මම බොරුද කියන්නේ කියලා ඕන අද ඉඳගෙන ටීවී එක ඉස්සරහ මම බොරුද කියන්නේ කියලා බලන්න. You count. You take 5 minutes and count number of advertisements. Most of them government side. Budget එක හොඳයි කියලා දාන්න. It's good. හොඳයි points හොඳයි කියලා දාන්න එපා. කියන්න දෙයක් නැහැ. වැඩිපුර කියන එක තමයි offset එක තියෙන්නේ. Right, then the other statistics, government statistics are there, then trade journals. So these are also important things. Like sometimes when we analyze financial data, you have to think about other news available. I can remember when we do one project report actually with Dr. Madhura Peruma for economics. I can remember we did kind of analysis for that time shell gas, and we evaluated the company and something related demand and supply in our first year, right? She did the economics for us. So then actually I can remember we got price of very big price anyway for the gas cylinder price we determined with the demand supply theory. But actually it is not matching with the actual price at that time. I can't remember exact price. But we supported our price with some journal articles. What is the behavior of gas market in our country? There are some newspaper articles. ඒ වගේන් තමයි අපි justify කරේ our price. හැබැයි compare කරද්දී market price there is big difference. අපිට our price එක අපි හදලා බලද්දී වෙන ලොකු ගාණක්. But market price is small. What's the reason? Now the difference of the gap was justified by newspaper articles. That's why I said now when you analyze something, you have to use all these information, government statistics, how they say something. Sometimes let's say if you predict some rate in the future, you have to support every time with some qualitative data published by these different agencies. So it's also part of ratio analysis, so financial statement analysis. I should take it as financial statement analysis, not ratio analysis. Ratio analysis is one technique that we can use to make financial statement analysis. Right. Some other sources we can use from actually what is called annual report. Not only financial statements, but you have to look. You have to look at chairman's report, you have to look at director's report, you have to read those. Based on that only you can evaluate your ideas. So that's why I said I need to do at least 3-hour session, how to use all these information to analyze companies' financial statements in practice. Not only limiting to this ratio calculation. Usually what we do, we take several ratios and we say, yeah, it has been increased or it has been decreased, it is good or bad. It is not the perception or the point that we need to make in analysis. We have to look all these, based on these only we can support. Sometime good example to think about accounting policies, let's say a very simple one, when you calculate net profit ratio from last year to this year, let's assume net profit ratio has been increased from last year to this year. But GP ratio, you can write it like this. NP, this is GP, already you have learned this, no? It's a version. Let's say last year NP 10%, this year NP, let's say 5%. Last year GP 20%. So it is 15% and here it's 5%. This is last year, this is current year. Yeah, right, correct, right? If you look this kind of scenario, what has happened? NP ratio has been increased while GP ratio has been decreased. What do you think? What is your opinion finally? These are profitability ratios, no? Profitability is good or bad? Sometimes major impact is they have used their some, let's say, vehicles or whatever the things, machines, they have changed the purpose. According to depreciation, what will happen? Sometime what they have done, last year, what we call, last year administration purpose, some machines they have used for industrial purpose. Then what will happen? Depreciation will be added to cost of sales. As a result of that, what happens? GP comes down. But NP, there is no administration, then it can be increased. So it means sometimes policy changes are purely affecting to have this kind of upside down ratios. You have to think about it. So therefore you have to read accounting policies and notes. What are the policies that they have used? Sometimes you can say, last year what they have done, they have used sometime this year equity has been increased by big amount. As a result of that, your ROC, return on equity, has been increased. If you analyze it properly, what has happened sometime? Return on equity value is sometime. You have changed two things. You have revalued. As a result of that, what happened? Revaluation reserve. Equity part goes up. One may be. Also, they have changed. They have reviewed their useful lifetime estimate. The useful lifetime estimate, they say now last year, let's say they assume only 10 years, then not 10 years, it is 15 years. Then what happens? Depreciation. It comes down. Depreciation comes down means profit goes up one side. They have revalued the same asset. Revalue balance useful lifetime. Revalued. Therefore what happens? Equity. It has been increased. Equity value. Right? And profit value. Depreciation. Value equity. Local revaluation reserve. What will be? Your return on equity will be increased. So that's why we have return on equity value. You have to check why, what is the reason. Sometimes because of these unnecessary valuations. Valuation means judgment, no? Judgmental one. No? Let's say if they need to go for the share market in the future, then revalue karla on that asset big equity they will show in their financial statement. You have to see it. Then when you analyze sometime, look, ROC, ROE, very good. It has been increased drastically. What's the reason? They have kind of expectation to go into the share market. To register, they need to show it, big one. එතකොට මිනිස්සු ඉන්වෙස්ට් කරන්න සල්ලි. එහෙනම් ඒගොල්ලෝ අවුරුදු දෙක තුනකට කලින් ඉඳන් ලෑස්ති වෙනවා මේ වැඩේ සඳහා. That's why they do manipulation financial statements. Then you have to look whether there is any intention to go for the share market. මොනවද කරලා තියෙන්නේ, what they have done inside the year. Whether they have revalued assets. Based on that only you have to analyze it. So my point, anyway, you have to think about all other information that you have. when you analyze financial statement. Sometimes, let's say auditor's report, you have to look how to link this auditor's report into financial statement analysis. අපි බැලුවද කවදාවත් auditor report financial statement analysis කරද්දී? නිකමටවත් බැලුවේ නැහැ. තියනවද බැලුවෙත් නැහැ auditor කෙනෙක් අතන report එකක් දීලාද කියලා. But you have to look at why. Sometimes let's say like this, I'm taking about examples. අපි දැන් මෙහෙම එකක්. Sometimes auditor has qualified financial statements with going concern doubt. අපි දැන් they have lost major asset just after accounting year. We call it events after reporting date. ඒක disclose sometime in financial statements. ඒක disclose කරලා නැහැ. අපි දැන් financial statements වල disclose කරලා නැහැ. Going concern hit එකක්. ඒ නිසා quality පුළුවන් ඕන නම් emphasis of matter paragraph එකක් දාන්න. You may have learned in auditing. දැන් නේද auditing එක? Learn now auditing? Yes. Emphasis of matter paragraph එකක් දාලා qualify කරන්න පුළුවන්. It's not qualification but you can add it. එතකොට if you don't read the annual report you can't find that fact. ඒ කියන්නේ going concern doubt එකක් තියෙනවා. But it has not been disclosed by the management in their notes. Notes වලත් ඒක නැහැ. But all what is called all whether the ratio is good or not. On the other side, auditor has qualified the audit report or added to matter paragraph. You know what is emphasis of matter paragraph? ඉගෙනගෙන නැත්තම්. Opinion තාම කරලා නැද්ද? Right. Anyway, now he can make a small sentence saying that there is going concern doubt of this financial of this company. එහෙම කියලා auditor ගහලා තියෙනවා අතන close එකක්. හැබැයි එහෙම තියෙද්දි අපි අනිත් පැත්තෙන් ratios ටික හදලා බලද්දී ලස්සනට ratios ටික තියෙනවා during the year. හැබැයි ඒගොල්ලෝ අපි හිතමු printing company එකක් කියලා. Major asset එක printing machine එක විනාශ වෙලා තියෙන after the year end. After the year end. After the year end එක උනේ. ඒක තියෙනවද financial data තුලට? එනවද? It is events after reporting date නේ. Events after reporting date වලදී මොකනවාද අපි කළේ? අපි කළා නේ මට මතකයි. කළානේ අපි කළා. ඒකේ මොනවද අපි කිව්වේ? If it is not non-adjusting events are not disclosed. just කරන්නේ නැහැ නේ ඉතින් machine එක ඒක එකම machine එක තියෙන. අපි printing machine එක ලොකු machine එක. ඒක ගිනි ගන්නවා annual year එකෙන් පස්සේ. ඒගොල්ලෝ මොනවාද accounting year එකෙන් පස්සේ. It's non-adjusting event. Very clearly non-adjusting. But we say if there is any impact to concern it should be disclosed. Management එක කැමති නැහැ ඒක disclose කරන්න. They don't disclose it. As a result of that, auditors will qualify. Oh, they will add kind of emphasis of matter paragraph. මොනවා හරි එහෙම qualify කරන්න පුළුවන් auditors වලට. No going concern නේ. එනිසා auditors ලා ඒගොල්ලෝගේ report එකේ ඒක කියයි. හැබැයි notes වලත් නැහැ. If you analyze without looking at the auditor's report, your overall ratio is very good during the year. හැබැයි no assets. ඔක්කොම ගිනි අරගෙන ඉවරයි. Financial statement එළියට එනකොට. එතකොට ratios බලලා කිව්වොත් එමා very good business you invest. Your answer is totally wrong. Look, that's why we say you have to look at these statements. I took only few examples. ඉතින් ඒක බලන්න නැතුව අපි කියනවා ratios ටික හොඳයි. Over trend. GP හොඳයි, NP හොඳයි. We call it liquidity very good. GRE no problem at all. ROC very good. Rosi දන්නවනේ Rosi? Who is Rosi? Rosi, you know Rosi? Rosi means ROCE. What is ROCE? Rosi ගැන කල්පනා කරනවා. Return on capital employed. We call it ROCE. ROCE. නෑ කල්පනා කරනවා ROCE. Yes, it's ROCE, right? No worries, right? There are four main ROCE, ROTA, ROA, ROC. Sorry, ROE, right? ඔය ටිකනේ තියෙන්නේ. Return on capital employed, return on total assets or return on assets, ROA we can say. Return on equity, miss one. Return on equity, return on total asset, return on capital employed. Those are the main four, no? Return on capital calculate karna. So then you have to look those. Everything is good, but no assets. Then can you encourage people to invest? No. So therefore you have to think on those points when you do any kind of analysis. So that's a message I need to pass finally. When look, cash flows, somewhere here. Notes to accounts. Everything should be used to analyze it. එහෙම නැතුව නිකන් අපි කියනවා නම් මේ ratios are good. ඒ නිසා බින්න දාන්න කරන්න no point. So therefore remember you have to use internal source of information. Look, all these internal source. ඔක්කොම මේවා use කරන්න පුළුවන් අපිට එක එක වැඩවලට. Based on that only you can make conclusions. But it is not that much easy. ඒතර අපි මොකද කරන්න ඕනේ නේද? You have to read everything. That's why I gave, if you can remember, an assignment. Last semester, second assignment to fill corporate information. All these were there. මතක නම් audit report එකේ ඉඳන් තිබ්බා. ඔක්කොම කරේ මොකද? ඒක හිස්. ඒක නෑ කියලා දැම්මා. එන්නේ කියලා ගහලා පිරෙව සමහර අය. Not applicable. Most of them. එහෙමනේ. I saw. Right. Most of the sales not applicable. එන්නේ. මන් දන්නවා ඉතින් මේවා තියෙනවා සමහර companies වල. දාලා නෑ ළමයි. There you calculate ratios and analyze, right? Then you can see with previous information. එතකොට තමයි හරි picture එකක් එන්නේ. හැබැයි අපි ආයෙම කරේ නෑ. අපි ආයෙ කරේ මොකද්ද? නිකන් Excel sheet එක ratio ටික දැම්මා. වෙන්න බලාගන්න කියලා ratios ටික දුන්නා මට. They didn't analyze it. What they did, they just calculated ratios. Some people wrote what is NP, what is GP. අර සර්කරප් එකේ එහෙමම ලියලා තිබ්බා. right? ලියලා they just calculated. It is also anyway sufficient at that level, but we are expecting more after learning this financial statement analysis. You will learn like this no? එතකොට ඒ කාලේ ඔයගොල්ලෝ හිතුවද මෙහෙම? මේක user perception එක දිහා බලන් ලියන්න ඕන report එකක්. මේක කාටද ලියන්න report එක? එහෙම කරාද? එහෙම කිව්වේ නෑ අපි කරන්න කියලා එහෙම. එහෙම කිව්වේ නෑ කියලා නෝ කියන්නේ නෑ. Right. Anyway, now you know what are the facts you need to consider. මේ හැම එකම තියෙනවා මේ information. අපි මේවා link කර කර බලන්න ඕන. Right? Sometimes you just check some ratios already calculated no. Sometimes even for us we can't what is called prove those ratios with our own calculations. අපි calculate කරලා බැලුවට එන්නේ ඒ ratio එක නෙමෙයි. There are methods. දැන් සමහර ratios කොහොමද ආවේ කියලා හිතා ගන්න අමාරුයි. They will have their own calculations. අපි තමයි දැන් ඒකේ තියෙනවා EPS 5යි කියලා. සමහරවිට අපි හදලා බලපුවම EPS 5 එන්නේ නැහැ with that data. කියන්නේ ඒගොල්ලෝ මොන හරි adjustments කරලා තමයි ඒක දාලා තියෙන්නේ. We don't know. Sometimes they will have their own justification. Those facts are not disclosed through financial statements. ඒ නිසා අපිට හොයාගන්න බෑ. Understand? I just said EPS but ඒගොල්ලෝ ratios calculate කරලා දාලා තියෙනවා annual report වල. අපි කරන්න ඕනේ නැහැ. all are there. You can see 5 years summary, 10 years summary, everything is there. අපි මොකටද හදන්නේ? හදන්න දෙයක් නැහැ. What we need to do? We need to understand interpretation. How to make a decision based on that. Right. When you make decisions, you have to look this qualitative information. Oh, this is very popular one in your lectures. It was there, I think, more than 10 times. I have seen in your slides, therefore I don't want to explain it again. What is this? Huh? I saw this was there in previous slides more than 5 times. I am 100% sure. What is this? Very simply. What me? Huh? What is it? Procedures. මේක තිබුණානේ. තිබුණ නැද්ද? කලින් slides වල. Same thing was there. මට මතකයි. What it says basically, analysis model. Right? You can have different aspects to analyze. That's what it says. Industry analysis, strategy analysis, financial analysis, and risk and profitability, accounting analysis, everything merged to get kind of big picture about the business. So actually after learning financial statement analysis, you will think about this, how to link these to make cost of capital, etc. Right? Yeah, right? So then common needs anyway now. We need to look at profitability, financial risk, long term, short term, leverage, everything. We look at simple one. When you look at financial statement analysis, basically we focus on these financial statement components. You know, I don't want to explain. Methods and techniques, actually there is no universally accepted method to classify these techniques. There are different techniques are there. එහෙම classify කරන්න කියලා method එකක් නැහැ ලෝකේ. කොහෙවත් එක 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 විදියට කරනවා. But anyway, basically we can go in like basic methods like horizontal analysis, vertical analysis and trend analysis. Actually trend analysis also some people say it's part of horizontal analysis. Trend එක බලන්නේ horizontal හරහානේ. Horizontal කියන එක mean එක තිරස් කියන එකනේ. තිරස් analysis කියන එකනේ. Financial statement across the period. ඒක තමයි horizontal analysis. Vertical කියන්නේ in 1 year you take elementary wise. Asset නම් total asset වලින් කීයද? එහෙමනේ. Vertical analysis you did, we call it common size financial statements. එහෙමනේ කලේ 100 කියලා දැම්ම total assets. ඒකෙන් percentage වලට හැදුවා. So that's what we call vertical analysis. And another one we call ratio analysis. You'll mainly we can say horizontal analysis, vertical analysis and ratio analysis. සමහර අය එහෙම කියනවා. So some people say horizontal analysis, trend analysis, vertical analysis and ratio analysis. There is no universally accepted method, but anyway you can understand now. There are main 3. Horizontal, vertical, ratio, right? So those are the main 3. Horizontal analysis already you have done. I just run through it. මම හිතන්නේ සති 4ක් මේවට ගෙවලා තියෙන්නේ. සති 4 I'm going to recap within 1 hour, right? So then what is horizontal analysis? You are there, no? Every day you said you came. You got individual learning, not for the subject. What is horizontal analysis? What is horizontal analysis? Hmm? Anything? Anybody? What is horizontal analysis? අපි මේ කරන්නේ නැදන්නේ දැන් මේ කරන්න කලින් මේක පොඩ්ඩක් දැනගෙන ඉන්න මොකද කියලා. What is it? Very simply, yes. How the change has happened across the time period, across a specific time period. Let's say from year 2000 2010, how the behavior goes. So across the time. So you can take it as base year, and you can take the growth, or you can have difference with the delta of each year. Current year minus base year or as percentage. Only this hadan pull. Hope you can remember this. Horizontal analysis. Current year minus base year divided by base year. We call it actually horizontal analysis based on percentage on a base year. And other one, current year just as a percentage of base year. This shows the increment in the first one. Anitha nikama total. Or both are correct. Something that we have done, percentage analysis. This is also same. We have taken a base year. So from base year, look, 2007 as 100. Then when it comes 2008, it's the percentage as a result of this. It goes up by 125%. Means increment is 25%. Right? So then when it comes 2009, it's 150. So base year make 2007 වලට වඩා 50% වලින් වැඩි වෙලා තියෙනවා. Compare 2007. But if you look at from the last year, මේ අවුරුද්ද නම් බලුවොත් එහෙම නම් 125 වලට 25 වැඩි වෙලා තියෙනවා. Small percentage to add to that, right? So that kind of analysis we can make. මේවා කරන්නේ ඔයගොල්ලෝ. කරන්න? Right. No need to. We යන්නේ පොඩ්ඩක් calculation පැත්තට. Analysis also done. ඇත්තට මට වෙන්නේ ඒතර financial statement ඔක්කොම කරලා තියෙන්නේ නේද? දැන් අපිට කරන්න දෙයක් නැහැ ඇත්තට. I don't have anything to do within 4 sessions. Financial statement analysis here. නේ? ඔක්කොම කරා? You didn't do anything. You did all these, no? The horizontal analysis, vertical analysis. මොනවද කරන්න තියෙන්නේ ඒතර අපිට? Nothing to do finally. All of you have learned. Practice more and more the same. All variables he explained. Now what we need to do? Now what we need to do further? More practice. More practical scenarios, is it? Okay, let's see. Let's see what we can do. Just to understand. Vertical analysis, you know, to take as percentage. You take total from total assets. So composition, it shows the composition of different lines. Trend analysis, you know, based on the horizontal analysis, then ratio analysis. I am not sure whether you need to have any kind of explanation relating to these ratios again. If so, I can do, otherwise I just can start working. What do you think? You need to understand these ratios again? Hope you have learned. If you need any kind of brief recap, I can do, otherwise straight away I can do calculation part. What do you think? What do you think? Can you remember all ratios? The ratios because usually we don't expect you to give ratios this semester. Because the main topic also financial statement analysis now. So therefore we should not give ratios in this kind of subject. You have to remember ratio and come for the exam. නැත්නම් සාමාන්‍ය සමහර exam වල ratio sheet එකක් දෙනවා. I'm not sure whether Andrew sir will give it. I'm not sure exactly, but sometimes he will give ratio sheet, formula sheet එකක්. Last time I am not sure whether you just checked whether it has been given because I didn't do this subject last time. Let's see. There is no universally accepted method to classify ratios. Actually, I also have a lot of criticisms on these classifications. I also told the same. No? There is no universally accepted method to classify, but sometimes you can say even earning per share. What ratio is it? Investors ratio. How to learn? Under investors ratio or some other category. You learn as investors ratio. How do you learn? Efficiency ratio. What kind of ratio is it? What does it show? Earning per share. What ratio? Efficiency, profitability. What ratio is it? Cash flow. Huh? Some people can say it's profitability ratio. Earnings per share. Some people can say it shows kind of efficiency for owners or the shareholders. Some people can say it is kind of investors ratio. When you take like let's say interest cover ratio, what is it? You can say sometimes it's kind of performance ratio. Sometimes you can say profitability ratio. Sometimes you can say it's part of solvency. Sorry, not solvency, liquidity. Right? What's the difference between liquidity and solvency? Those two terms you use in these slides. What's the difference between solvency and liquidity? I told it in the class, in accounting one also. Everywhere you have solvency, liquidity, everywhere. What is the difference between these two? Solvency? Cover what? What liability? Long term or short term? Liquidity? Liquidity is short term, solvency is long term. That means possibility or ability to cover short term debts of a company, we call liquidity. Ability to cover long term liabilities, we call solvency of a business. Right? So it's kind of important thing. Now anyway, you can see liquidity ratios are there, efficiency ratios are there, profitability ratios are there, even return on equity. Is it profitability or something else? Sometimes you can say it's kind of investors ratio. Return on equity now. Invest කරාදී බලනවා return on equity කොච්චරක් තියෙනවා කියලා. On the other hand, you can say it's performance. It shows kind of efficiency. Sometimes you can say it's profitability. ඕන එකක් කියන්න පුළුවන් එක එක්කෙනාට, right? But general classification we will take. Liquidity, solvency, current ratio. You know, I don't want to explain these now. One by one, already you have learned. Therefore, no need, no. Liquidity ratio, sorry, current ratio is done. Current asset to current liabilities. Hope you know how to calculate it. What is rule of thumb relating to current ratio? What's the meaning of current ratio? What's the meaning of current ratio? Meaning? Yes, how much of current liabilities you have, sorry, how much of current assets you have to settle its current liabilities. Usually we say we should have at least 2 units of current asset to cover 1 unit of current liability. Rule of thumb is 1:2 or 2:1, sorry, 2:1, right? It means we should have 2 units of assets to cover 1 unit of liability. That kind of scenario should be. Acid test also there. Then there is another one, it is called super liquid ratio. This is cash. This is acid test, no? Or quick asset. Means removing inventories and prepayments compared to other assets. These are too little, actually less liquid. So therefore we remove these two. Efficiency ratios, receivable turnover, collection period, everything I think you are very familiar with this, therefore I don't want to explain one by one. Inventory turnover, everything you know very well. දන්නවනේ calculate කරන්න. හරි. හදලා නේ ඇති වෙලා තියෙන දැන් ඒක හදලා නේ. You calculated in the class. I think no. You didn't calculate in the class. Correct, Danny? So that's why Andrew sir told me to do some calculations in the class. Yeah, explain I wanted to just run through it. So that's why I did it. I'll do calculations. I'm not sure whether you learned cash conversion cycle. Cash conversion cycle? Hello? Yes. Inventory retention days plus collection period minus payable period. Right? So let's say a very simple example. After buying goods, we retain it for 10 days. We call it inventory retention days or inventory turnover in days. How many days you retain your inventories in the stores before selling? Then after selling, what happens if you sell it on credit, you will take some more days to collect money. So that is what we call debtors collection period or debtors turnover ratio in days. Then for purchasers, you bought goods now, you take some time to repay money. We call it creditors payment period or we call it creditors turnover in days. What is cash? You need to invest in this working capital cycle. That's what we call cash conversion cycle. To buy goods, so after buying goods, you have to retain, let's say 10 days in your stores. After selling goods, you have to take another 30 days to collect money. Then altogether you need to have 40 days money to run day-to-day operations. But on the other hand, you can delay your payments, let's say for 15 days. Then net of 15, let's say 10 days, net of 40 වලින් 10 ගියම 30 days. 30 days වලට අපි ගාව සල්ලි තියෙන්න ඕනේ. So that's the meaning. So inventory period 10 days, so I said 10 days, debtors collection period, let's say 30 days, altogether 40 days, but you can delay your payments by another 10 days for creditors. So 30 days වලට සල්ලි අපි ගාව අතේ තියෙන්න ඕනේ. So that's what we call cash conversion cycle. Cool, ne? Creditors turnover and everything you know. Then ඕනනම් කියන්න කල්පනා කරන්න. I don't do these calculations. This is important. Long term solvency ratio. What is long term solvency? Anyway, solvency means long term. තමයි කියන්න දෙයක් නැහැ. Right? Debt to equity ratio. Hope you have learned this. What type of debt you take? Debt කියලා දැන් financial statements වලින් ගන්නේ මොනවද? Current liability ද, non current liability ද, total liability. Both. Debt. Debt versus equity, right? So then both, remember. Then how to calculate equity ratio? Debt to equity ratio. How to calculate this? That's a formula. Total debt divided by total equity. We call it actually leverage or gearing, right? So then usually we call it which one should be more. Let's say there is a company X. This ratio, debt to equity ratio, let's say it's 40% debt. Here, let's say 30% debt. Which one is good? Debt to equity ratio, or you can say 0.4, 0.3. කෝකද හොඳ? Why? Why? That's the reason. Less gearing. You have only debt 30%, you have more equity. Is it so? Everybody say why good? Anyone online? Which company is good? I told you, if I ask good, in what sense? So you have to think on that. I didn't say no. In which sense you are talking about? Huh? Which user you are referring? So you have to be careful. That's why I asked. Yeah, somebody says, why is good? As now look, less risk. Risk is to whom? Less debt. For actually, if you are going to give loans, if you are going to give loans for this one, that's lender's point of view. I prefer to give loans for why? Why? More potential to get debts compared to other one, compared to other one. But if I am an investor, sometimes I prefer to go in X. Why? I'll show you reason. More debts means high gearing means sometimes, what's it? High gearing we can't say bad if you have business. It's true, risk is little high, but the profitability is high. But in this case, in the X case, they have only 40% of debt. It means 60% of equity. Then ownership is little. 60% means now, in the other case, 70% equity. They have more owners. Then everything will be shared over 70 people, 70% people in Y. In X only with 60% people, 60% people. On the other hand, due to this debt, you can have kind of profitability. Debt is good if you have business. You have to look it, whether they have enough business. If you have enough business, don't worry, get loans and run. Why? It's kind of simple theory. If you have enough business to do, don't worry to get loans. You go with loans. It's kind of profit to you. Why? You are running not with your money, others' money. That's the reason. I will show you one example. Yes. Look this. What is it? There are two companies. Asset they have 1 million of each of these. Now in first company 1 million assets fully owned to owners. It means you can see now gearing is 0%. They don't have debts. On the other side, total 1 million worth of assets are financed by, partly financed by owners, and balance part is financed by debt, 500,000 each. Got it? Then if you look at profitability, both the companies are earning. Now this is kind of hypothetical example to show you the scenario. Both the companies are having profit before interest and expense 300,000. Then in first scenario you don't have interest expense, right? No debt, no. The second scenario you have interest expense of 75%, sorry 15%, it means 75,000 on debt, 500,000, very clear, no? Then what happens? Tax rate is 30%, applicable for both the companies. Then you pay tax. First company pay tax 90,000 and second company pay tax 67,500, less tax compared to the other. Now compare, accordingly you can calculate profit after tax. Now what do you think about ROE? Return on equity. Profit after tax divided by equity, no? Their equity is how much? 1 million. For 1,210,000 means 21%. What about the other side? Return on equity. It's high. Look, gearing, what do you think? They are 0. The other side, it's 50%. What do you feel? It should be bad, no? According to your analysis, previous analysis. That is the point we need to think on. Look, very simply now, return on equity is higher in company B. They have debt. That's why I said if you have business, don't worry to go for debts. Get debts and do the work. Why? Your return on equity will be high. It is high. That's why I said profitability for your equity owners high. In the previous example I show you, more in entity B 30% X Y right hand side one. As I remember 40%. 30%. Just take it. In Y 30%. 40 and 30, yes. More equity holders in the Y. Less equity holders in X. Then they are geared 40%. 40% debt. No worries. එතන මොකද වෙන්නේ? අර ඒ කියන්නේ 60 අතර විතරයි බෙදෙන්නේ. Then return on equity will be increased. That's how I said. Somebody said less risk. Therefore, Y is good. No, on the other hand, even though less risk, less return. No. We learn that principle in finance. No? So less risk means your expected rate of return is less. On the other hand, don't worry, if you have business, go with debt. You can maximize shareholders' equity. So that's the lesson we can learn from this kind of example, right? So same thing, no, even we have, if you have personal, like, don't worry, get loans and run. But there should be areas to go and areas to grow. Both are important. But and on the other hand, what we say, we should not take loans and all others for consumption. So that's kind of basic theory, no? So you learn later in financing, the debt, equity, everything. What we say, usually we don't recommend people to finance long-term assets by using short-term liabilities or short-term funds. Usually what we say, we don't take bank overdraft for day-to-day consumption, for buying fixed assets, no. Bank overdrafts are taken to run day-to-day operations. It means short-term financing options should be used to finance short-term activities or day-to-day activities. Short-term financing options like bank overdraft and the delay in payments should not be financed to long-term assets. On the other hand, what happens? Long-term financing options like bank loans and others, we should not use to run day-to-day operation. Why? No profits. How can you repay it? Long-term debt options or the financing option should be used to long-term financing or long-term assets. That's the country now. We have these days problem. Now, what's the reason? But I feel, as I know, as I understand, but they say now they take loans, long-term ones, to repay loans. Loan repayment means current activity. Understand what I said? Loan repayment means short-term transaction, day-to-day operation. Loan repayment means we should not take long-term loans to repay again loans, also to finance short-term activities. It is not advisable. This is very simple thing. No? Let's assume if you get a bank loan and if you use that bank loan for consumption, how can you repay? When self-finance, bank loan what happens? How can you repay it? So it's kind of problem we have. So it's kind of problem in the future. Now anyway, now previous people, what they did, there may be corruptions and all, we know. People are talking about it. But anyway, they got long-term loans and invested in long-term assets. Simple basic theory in finance is complying with it. But we should not take, some politicians, they say, we take long-term loans to do all these day-to-day operations. It is not good. Very bad. Since they don't know finance, doesn't matter. Security right? Right? So people are talking like that. No? IMF billion to repay parana gatta naya given. ඒකට අපි loans ගන්න ඕනේ ඊළඟ. ඉතින් ඊට වඩා හොඳයි නේ තිබ්බ loan එක තියන් හිටියා නම්. දෙකම එකයි. Sometimes. But they say now they have an argument. Previous loans high cost. Therefore we are going to settle by taking ඒක වෙන්නත් බෑනේ. ඉතින් එහෙනම් ඊට වඩා ලොකු loan එකක් ගන්න එපා. අරක settle කරන්න. ඊට වඩා හොඳයි now as basic principle in loans. What we experience, if we get a loan, since it is going in reducing balance installments, we should not make early settlements. That's simple theory again. Even though high rate it is also agreement වලට ඒගොල්ලෝ ගන්නවා අපි personal loan එකක් ගත්තත් එහෙමනේ මොනවාද settlement fee කියලා charge කරනවානේ something. Therefore what we should do, වැඩිපුර කැපෙන්නේ මුලදී මොකද්ද? දැන් අර මිනිස්සු හරි වැඩි ගන්න හරි ගත්තා නම් භාගයක් ගෙවලානේ දැන් ඒක ඉතුරු ටිකක් ගෙවනවා මිසක් ඒක ගෙවන්න යන්න හොඳ නැහැ. We should not do it. ඒක එහෙම යන්න දෙන්න ඕනේ හිමීට ගෙවාගෙන පුළුවන් හැටියකට. We should not do that. So it's kind of simple theory, but they are violating the rules. ඉතින් සමහර ඉතින් ඔය කට්ටිය කියනවා නැගලා පොඩුවට ලොකු ලෝන් අපි අහවලකින් ලොකු ලෝන් එකක් ගන්න මේ කන්න බොන්න නැත්තම් ගෙවල් හදන්න මිනිස්සුන්ට. We should not do. ගෙවල් ලක්ෂයක් හදන්න අපි මෙන්න IMF එකේ ණයක් ගන්නවා. Is it good? මැටි මෝල් తీරන. They should not do like that. Why? They should invest it somewhere. If they get big or the long term loan. Very risky thing. ඊට පස්සේ අමාරු වෙටන ඔක්කොම ගෙවල් විකුණන්නේ කොහෙට විකුණන්නද? ගිහිල්ලා IMF එකට ගෙවල් ගලවන් ගිහිල්ලා එහෙ තමයි විකුණන්න වෙන්නේ. Nobody will buy it. No? So that's the reality. We should not do like that. It's kind of poor financing decisions. ඒව නම් හුඟක් වෙලාවට එහෙම කරන්නේ නැතුව ඇති. I don't know. The politicians ඉතින් ඔය කියනවා එහෙම. අපි IMF එකේ ණයක් අරින් හරි ගෙවල් හදනවා කියලා. ගෙවල් හදන්න IMF එකේ ණය ගන්න හොඳ නැහැ. IMF එකේ ණය අරන් මොකද කරන්න ඕනේ? They should give kind of infrastructure to people to develop by themselves. එහෙමයි කරන්න ඕනේ. ඒක හොඳයි. අන්න මොකක් හරි companies 10ක් දානවා අපි ණයක් කරන්. It's good. And we give employment. Then we allow people to develop by themselves. It is good no? ඒකෙන් burden එකක් නැහැ. Why? They earn and repay. එහෙමනේ ඔය highway යනම්ම නම් ආවේ ඔක්කොම එහෙමනේ. But they got loans and constructed it. From the highway project also they earn. ඒවා burden නෙමෙයි අතරම. ඒවා profitable business. They earn billions now. highway වලින් කොච්චර profits ද? Anyway, that profit, I don't know what has happened actually. The real scenario, part will be to the country and part will be for other companies. I don't know exactly. But anyway, those are not loss projects. Why? They long-term funds invested in long-term projects. Russian, they have kind of return. While long-term funds are on short-term projects, invest karo, we have a problem. Recently, India also gave a big loan. Not recently, a few months back. It's short-term loan. And also we should not invest short-term loans in long-term assets. මොකද වෙන්නේ? ගෙවන්න බෑ. Short-term loans are long-term investments කරන්න හොඳවත් නැහැ. Because we can't repay it. No? We don't have money again. ඒක ගෙවන්න තව පාරක් අය පාරක් short-term loan එකක් ගන්න වෙනවා. Then it's sometimes high cost. So therefore we should not do it. Those kind of things are also important when you analyze this. නැතුව ඉතින් analyze කරන්න බෑ අපිට අතට. Hope you can remember this. Asset turnover, you know. And sometimes here when you take average total asset or total asset, there are some confusions. There is no universally accepted method. Some people say it's average total asset. Average එකත් කොහොමද ගන්න? Beginning asset plus closing asset divided by 2. Some people say no, you take just a total asset of that year. එහෙමත් තියෙනවා. ඉතින් ඒවට universally accepted base එකක් නැහැ. Right? මේ අපි කරා එක. There are market based ratios. Hope you can remember these. Earning yield, dividend yield, earning per share, dividend per share. How to calculate earning per share? Total profit after tax minus preference dividend, because we have to subtract preference dividends if you have, because there is fixed commitment to pay them. Profit after tax minus preference dividend divided by number of ordinary shares. Dividend per share, how to find? Dividend yield is there. Total dividend divided by number of shares. Then we can take dividend per share. So then you can see this is price earning ratio, or you can say the reversal of this, earning yield. Earning yield means market price per share. Now in any case, if you take the term yield, market price should be the denominator. මතක තියාගන්න. Lazy. Yield කියලා આવුත් මොකක් හරි earning yield, dividend yield, every time market price will be the denominator. යට තියෙන්නේ market price එක. So kind of shortcut to remember. නැත්නම් මේවා පැටලෙනවා සමහරවල්. Right, enough I think. Just do simple question. Very simple exercise. Just calculate these ratios quickly. You need to have break. 5 minutes. Okay, then we'll have break for 5 minutes and come back quickly.